Oil just broke below its first support level at 92.56, and the crowd is piling into shorts like it's a sure thing. But here's what they're not seeing. We are parked exactly on the 100-day moving average, a level that hasn't been touched since the last supply shock rally. That means every single short right now is chasing a breakdown into a high probability bounce zone. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end. I'm giving you 3 exact levels you can trade tomorrow, complete with sniper entries, stops, and risk-reward ratios you can screenshot. The session bias on Brent is a fade. We are in a strong sell on the daily, a strong sell on the 5-hour, and a sell on the 60-minute. That's a coordination of bearish momentum across the tactical timeframes. However, the monthly trend is a strong buy, and that's the trapdoor. The herd is leaning heavily short, and the daily CCI is at -134, deeply oversold. The Williams %R is -83. Oversold on a strong sell trend means continuation is possible, but the risk of a sharp snapback has just tripled. The single invalidation level that flips my bias from fade to full-on breakdown is a 4-hour close below 90.88. Write this number down, 90.88. If we get a sustained break below that, the structure resets to target 88.12, and the monthly uptrend gets tested. Right now, the herd's position is skewed short, and liquidity is building above the pivot at 95.32. When everyone is looking down, the market often does the opposite to fill those stops. That's what makes the next 48 hours so dangerous. Let's walk the charts from the top down, because this is where the institutional footprints are hiding. On the weekly time frame, we have a clear sell signal. Brent is trading at 92.26, well below the 20-week moving average that sits up near 97.38. The MACD on the weekly is negative and accelerating. This is not a dip buying paradise yet. But when I zoom into the daily, I see a fight brewing. Price is sliced through the 20-day and 50-day MAs. Both of them are sitting up around 97.20 to 97.38, acting like a ceiling. And yet, price has stopped right at the 100-day MA, 92.03. That's the level holding everything together. The 200-day is far below at 83.81, so the long-term structure is still intact. The daily RSI is at 40.96, bearish territory, but not yet washed out. The stochastic is mid-range at 42.94, so there's room to fall further, but not without a reaction at this floor. Now drop to the 4-hour chart. This is where the hidden divergence that most traders miss is quietly building. Look at the 4-hour MACD. It's at -2.41, deeply negative, but the histogram bars are starting to shrink against the prior low. That's early-stage positive divergence. It's not confirmed yet, but it's whispering that sellers are exhausting themselves right at the 92.03 daily magnet. On the 60-minute, the trend is sell, but the CCI of -134 is screaming extreme. Every time this contract has hit -130 or lower on the hourly in the last quarter, it has bounced at least to the MA20 within 2 sessions. I'm not saying this is a call for a reversal, but it is a call to stop blindly shorting. The pivot point for today's session is 95.32. That's the line in the sand. Support levels. S1 was 92.56, which we just pierced. That turns it into near-term resistance. S2 is 90.88, the invalidation number I gave you. S3 is 88.12. Resistance levels. R1 at 97.00, R2 at 99.76, R3 at 101.44. The ATR is 4.52, meaning we can cover the entire distance from here to S2 or to the pivot in a single headline. And here's what most traders miss. Gold is catching a safe haven bid while oil slips, which tells you this is not a broad commodity sell-off. It's an oil-specific geopolitical recalibration. Crude is pricing in a response that hasn't yet disrupted supply, and that gap between rhetoric and barrels is where the opportunity lives. Yesterday's news changed the intraday map completely. Oil slips. Traders on edge after Trump vows a response to Iran's helicopter shooting. The initial reaction was a sell. Why? because the market had already built in a fear premium in the days prior, and the actual vow didn't immediately close the Strait of Hormuz. It was a classic buy the rumor, sell the fact on steroids. But here's the nuance. Analyst sentiment is noting that oil prices are staying elevated, while the bullion bid is looking elsewhere, meaning gold is absorbing the pure fear flow, and crude is repricing the probability of actual supply disruption. This is a critical cross-linkage. If gold and oil decouple, oil's downside becomes more about demand fears than geopolitics. But if gold continues to rally alongside a renewed crude spike, then it's a full risk-off supply shock trade. The 1 to 2 week directional lean, I'm neutral to bearish until we reclaim 95.32. The path of least resistance is down as long as we stay below that pivot. However, any new escalation, like a naval incident in the Gulf, instantly invalidates that and targets 97.00 and beyond. The exact event that flips my lean to outright bullish is a daily close above 97.38, the 20-day MA. That would be the market saying supply is truly at risk. On the downside, a weekly close below 88.12 opens the trapdoor to 83.81, the 200-day MA. That's your big picture framework. Do you think Brent breaks below 90.88 this week? Comment yes or no. I'm tracking the consensus and will share it in tomorrow's session. Most people skip this section. That's exactly where the money is made. Keep watching, because I'm putting exact levels on your screen that you can screenshot and trade. Strategy 1 is the sniper, the conservative play. This is a mean reversion long off the 100-day moving average. We wait for a 1-hour close above 92.56. That reclaims the broken S1 level as support. Entry is at 92.60 with a tight stop loss at 92.00, just below the 100-day MA and the psychological $92 handle. Target 1 is 94.20, which is the midpoint before the pivot. Target 2 is the pivot itself at 95.32. This gives you a risk-reward ratio of approximately 1 to 3.4. The setup is void if we get a 4-hour candle close below 90.88. That would signal the 100-day MA has failed and the bounce is dead. The sniper, conservative, entry, 92.60, 1H close above 92.56, stop loss, 92.00 take profit 1, 94.20 take profit 2, 95.32 risk, reward, 1:3.4 R invalidation, void if 4H close below 90.88. Strategy 2 is the active trader, for those who want to ride the trend but with a structured plan. This is a tactical short on a pullback to resistance. We wait for price to retrace to the 95.32 pivot level. That's the entry. You don't chase the breakdown. You wait for the market to come to you. Stop loss is above a 1 at 97.10, giving you a clear invalidation point above the daily Mars. Target 1 is 93.10, just above the 100-day MA, and target 2 is 91.00, right before S2. The risk-reward here is about 1 to 2.2. Once target 1 is hit, move your stop to break-even and trail it by half the ATR, so roughly $2.20. This setup works because the daily trend is strong sell, and any rally into the pivot is likely to find selling pressure from the 20-day and 50-day Mars hovering just above. Type your Brent range for tomorrow in the comments now. Let's see who's aligned. My range is 91.50 to 94.80. The active trader, standard, entry, 95.32, pullback to pivot, stop loss, 97.10 take profit 1, 93.10 take profit 2, 91.00 risk, reward, 1:2.2 R invalidation, void if daily close above 97.38. Strategy 3 is the aggressor, the high-risk play for those who can stomach volatility and want to catch the falling knife before the crowd. This is a counter-trend long at S2, 90.88. The entry is a limit order at 91.00 with a stop loss at 89.80, just below the S2 and psychological round number. The targets are quick scalps. Target 1 is 92.30, right at the current market level, and target 2 is 93.60, near the MA5. This is a momentum fade that relies on the oversold CCI and the monthly uptrend holding. Risk-reward is near 1 to 2.8, but the win rate on this kind of trade is lower. Only for those who can lose small and manage risk aggressively. If the daily close is below 90.88, this trade is over. Get out the aggressor. High risk. Entry. 91.00. Limit at S2 support. Stop loss. 89.80 take profit 1. 92.30 take profit 2. 93.60 risk. Reward. 1:2.8 are invalidation. Void if daily close below 90.88. Never risk more than 1 to 2% per trade. No positions through high-impact news like an Iranian response or a sudden White House statement. Stops are non-negotiable. This is how you survive to trade the next big move. The single most critical level for the next session is 90.88. If we break and close below that on the 4-hour, the structure resets bearish, and 88.12 becomes the magnet. If we hold above 90.88 and reclaim 92.56, the bounce has legs. Tomorrow's wildcard is any follow-up rhetoric from Washington or Tehran. One headline can send this contract through the pivot or through the floor. If you want the full breakdown on Bitcoin and the S&P divergence, that video is live now. Tap the end screen. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.